All right, guys, welcome back. This is part 2 of Trading for Beginners. Part 1 has literally had millions of views, so there's no doubt in the value that people get from that video. And if you haven't already watched that, I recommend you go and watch that one before you watch this one. The purpose and the objective of this series is to get you to consistently profitable trading without having to blow your money and put tons and thousands of pounds into some guru or some scammer who's just going to take your money, not really give you the value. I'm really trying to teach you to fish yourself here so that you can actually grow your money and not lose it. The whole point of financial freedom and wealth creation is to grow your money and not give it away or blow it in these silly kind of schemes and things like that. So the purpose and the objective for this particular video is applying everything you learned in the first one, and now I'm going to delve into strategy development. I'm going to go into the ins and outs of some very, very powerful tools and some platforms that you can use to now take that forward and develop as a trader and build a strategy and actually start trading and bringing in some decent income. So that's the goal for this. And before I get into that, the prerequisites are really go and watch part 1 if you haven't already watched part 1. If you have watched part 1 already, then you should, have the account open, the broker account and everything like that. You should have got the backtesting spreadsheet and everything. And if you haven't, the links are in this video below as well. The next prerequisite is subscribe to the channel. Subscribe to the channel and let us know in the comments that you're here. I do reply to every comment, and I love to see who's following along and who's here for the first time or who's following the whole series. And also make sure that you hit the bookmark this video. Okay, so bookmark the video so that you can keep coming back to it. This is going to be another one that you're going to want to watch multiple times. The first one was watched multiple times, and this is going to be the same. And you might also consider downloading the video onto your device if you're traveling. It's great for that. If you're on a flight or you're by the beach or somewhere with no signal, you've got it there on your phone or on your iPad or on your device to watch over and over again as you please. So that's the prerequisites, and there's another one which is beware of the scammers. There are scammy accounts. Unfortunately, there's accounts replying to fake comments with my logo, my picture, and it's not me. The only comments below should say creator next to it, or with a verified badge next to it. So that's the only comments that are coming from me. If you're getting asked to WhatsApp or Telegram or anything like that, or you're getting fake stories of results, that is not me or my team or anyone here. Remember, I want you to grow your money, not give it away. So, with that said, if you have watched part 1 and you're here, welcome back, buckle up. It's going to be another long one, so you're in for a treat. We're in for a long ride here. And you can also play along. You should have the account open. If you've got the account open now and the broker account and everything, go and do that now if you haven't. But if you have, you can literally play along as we go, and you're going to get through this thing with very, very efficient results. One final thing to say is the video is cut into chapters, and I've timelined all those chapters so that you can quickly navigate back to bits that you found interesting or more relevant to you. But we're going to go through strategy, we're going to go through in-depth trading platform stuff. I'm going to talk about testing and journaling in particular. I'm going to touch on that as well. I'm going to talk about fees. I'm going to talk about scaling your wealth via trading, and really just cover off all of the questions that people had from the first video, part 1. So hopefully I cover everything that you want to see. If I don't, then let me know in the comments if you've got any questions, and as always, I'll answer my best as best I can. Let's get stuck in. All right, so what I'm going to do now is get stuck straight into giving you guys some rules of engagement into an actual strategy that you can go and test and trade. Because in the last part 1, we went through kind of the concepts and principles of developing a strategy and what it was made up of. And many of you went away and had great results with that. And particularly those of you guys that went on to the 30-day trader challenge, mind was blown how much, how fantastic you guys did on that challenge. But what I want to do is give you a place to start, because sometimes you can say, well, I don't really know where to start, and you don't know what you don't know. So sometimes you just need a strategy as a basis so that you can put the reps in, get the practice behind you of how to go and use this stuff. What I will say though is, no one ever became consistently profitable by taking a strategy from someone and then just going to trade it exactly how it was. And I'll say that now because you can give the most profitable strategy to two different traders. One will make money with it and the other won't. And the reason being is because everyone's got different eyes, everyone's got different personalities, and you want to pick a strategy that suits you, your time frame when you can trade it and all the rest of it, right? So what I'm going to share with you now is a very, very simple trend strategy that anyone can do. It's on the daily time frame, so the higher time frame, and it's something that you can spend very little time doing, but have amazing results with. This strategy alone has been capable of bringing me in a great income on its own. So I'm excited to share it with you. So let's talk about the rules of engagement first. And then what I'll do is show you some real live examples on the charts, because we know that they are a little bit different when you go into the live markets. The theory is all great, but when you see the live charts, it's a different story. So first things first, we're going to look at the identify phase. Okay. Now we're looking at the daily time frames here. And we know that markets move in cycles. We learnt this in part 1. We got phase 1, phase 2, phase 1, phase 2. And when we're in a trend, an upward trend, we get the runs and the pullbacks. This trade strategy that I'm about to share with you, we're interested in those pullbacks. Okay, so you want to think of this if-then syntax going on. It's if-then, right? So if we are in phase 1, this is not a trade for you. If we're in phase 2 and we've got a pullback, that's when we start looking for this particular setup. And in a bullish setup, we're looking for the pullback down. And in a bearish setup, we're looking for a pullback up in the phase 2s. Make sense? Pretty simple, right? Another filter that we want to look for is if we're at previous structure support and that becomes resistance, or previous structure resistance becomes support, that could be an additional filter that we add into this strategy to make it even more high strike rate, basically a higher probability setup. Now you can go and test this on lots of different markets, every different market. I've tested it on a handful of markets of which I trade it on, and I've tweaked my portfolio to suit. But go and test this on any of the major markets or any indices or anything that you want to trade it on, really, stock market, and you'll find phenomenal results, I'm sure. So first things first, we just want to identify what phase we're looking for. And we know now that we're looking for the pullback in a bullish or bearish market to catch that continuation, to catch that next run. So the next thing we want to do is predict where market's likely to go, right? Now, a great predictor that gives you a high probability prediction that market's likely to go and continue in the direction that it's the prevailing trend is exponential moving averages. I touched on this in part 1, but in part 2, I'm going to be sharing, and I'm going to show you how to set all these up in a minute. But I want to share with you 3 powerful exponential moving averages. And the reason I like to use exponential moving averages rather than standard moving averages, just as a quick note, is they're faster reacting. So you get that feedback quicker because all of these indicators are lagging anyway. So what I like to do is use an exponential moving average because it's faster acting. And also I like to use 3 of them because when all 3 of them are in confluence and say the same thing and there's congruency between all 3, that's a very, very powerful way to use these filters into a high probability prediction. So if we're looking at the pullback, we want to predict that the market's likely to carry on with that extension. Using exponential moving averages is a great way to do that. And I'm going to be using the 8 exponential moving average, the 20 and the 50. And it's always a good idea to color those different colors so you can easily identify which one's which for this strategy and other strategies. Don't worry too much about that at the moment. I'm going to show you exactly how to set all this up. Just for now, just take the notes, right? So far, identify bullish or bearish trend. Second, look for the pullback in a bullish or bearish trend. Third, consider using exponential moving averages, 8, 20, and 50. In fact, don't consider using them. Use them for this particular strategy. So what that looks like here is we're looking for a fanning effect where the 8 has to be before the 20 and the 20 has to be above the 50 in a bullish trend, or in a bearish trend, the 8 has to be below the 20 and the 20 has to be below the 50. In other words, the 8 has to be nearest to price and the 20 has to be second closest to price, and then the 50 has to be the third closest to price. I've shown it in a very, very simple diagram here that should be very easy to understand. We want this nice fanning effect. The more that they fan out, the higher probability that the trend is strengthening and is going to continue in that direction. Okay, so something that wouldn't be valid is this. Can you see where we've got the pullback here and they've started to cross over? That wouldn't be valid, whereas this one would have been. All right, so we're looking for the pullback. We're looking for the 8, the 20, the 50 in that order, 8 being closest to price, then 20, then 50. And when they start crossing over like this, that is an invalid setup. We don't want to look at a pullback at all or look at a setup at all when the exponential moving averages are crossing like this, because that means that there could be a reversal very soon or a lot of consolidation, meaning you'll be in the trade for longer than you need to be. All right, so identify, predict. The next part is decide. How do we decide to get involved, to start engaging in the setup? Because we've identified the trend, we've identified the pullback, we've now predicted that the market's likely to continue by using our exponential moving averages to give us a bit of confidence that we're likely to go in the direction of the prevailing trend. Now we just need to decide how we can get involved. And what we're looking for is particular price action patterns. Okay, so we're looking for, remember I went through the price action patterns in part 1, the 6 principles of price. Price action patterns can be a doji candle or a high test wick candle. This particular strategy, what we're looking for is when we're in a bearish setup, we're looking for the open and the close to be in the lower 30% of the entire candle body. All right. Now, I know this is a lot to take in and you're going to want to rewatch, but I encourage you to keep rewatching until you understand this. All right. So you just want, if we're looking for a pullback and looking for a continuation bearish, we want to know that the price has extended up. Remember that tug of war, and then pushed and been rejected all the way down. So we've opened and closed in the lower 30% as per this diagram right here. Okay. We also want to make sure, and we can use this, we can use the Fibonacci tool, as I showed you in the last video, how to measure using Fibonacci tools. You can set up your Fibonacci tool to have a 30% measure on there, 50% measure. Some people like 50, some people like 33.3 as in a third. I like to be below the 30%. Okay, so open and close in the lower 30% of the entire candle body. Now, you might develop this and have rules for the length of the wick and all the rest of it, and I encourage you to build those rules later on. But for now, to get used to this strategy, I want you following along just as exactly as I'm giving it to you here. Now, in a bullish setup where we're looking for a pullback down and then catching the run to the upside, we obviously want to look for bullish candles, which means the open and the close needs to be in the upper 30%, not the lower 30%. And the same rules apply. Okay, so as a very basic diagram, it will look something like this in a bullish setup. We wait for the pullback. We want to find one of those candles, that price action pattern, right at that pullback around that zone where the 8 moving average is, which I'll explain more in a minute. So around these zones, remember, we never catch the bottom and sell the top. Very rarely can we do that on a consistent basis, but this is going to provide you a darn good close try at that. All right, about as good as it gets. So we want to look for this candlestick pattern around this zone in a bullish market, and then in a bearish market, of course, you want to look for it on the pullback up, open and close of the candle in the lower 30% of the body, and here open and close in the lower upper 30% of the body. Make sense? Cool. Now, if we're looking for a bearish setup, here's the rules for the 8. Okay, so we know that our exponential moving averages need to be fanning out and in order. So that's why we use 3 of them. But the only actual exponential moving average we use for the signal, for the decide part, is the 8, which is the one closest to price, if you remember. So what we're looking for is our candle, our price action pattern that we're using to decide to get in, to be either touching, it has to either touch or be above the 8 exponential moving average in a bearish setup. In a bullish setup, it's the opposite. The price action pattern that we're looking for with the open and the close in the upper 30% of the candle needs to either touch or be below the 8 exponential moving average. Okay, I won't repeat it for the sake of keeping this video not as long as it needs, you know, as short as possible, but you get the point, and rewatch it if you need to. So for instance, this candle here would be valid in a bearish setup because we touched it. This one would be valid because we touched it. This one would be valid because it's above it. This one wouldn't be valid because it hasn't touched it or isn't above it. All right. And in a bullish setup, we touch it here. So that's tick. We touch it here. Good to go. We are below it here. So that's good to go, which is, of course, it would have touched it at some point. And then this one here is not valid because we haven't touched it and we're not below it in a bullish setup. Make sense? Very, very easy, very simple to understand. Now it's time to execute. So we've identified the trend, we've identified the pullback, we've predicted that markets got a high probability of extending on in direction of our prediction because of the exponential moving average confluence and the power behind using all three. We've then decided how to get involved by waiting for a certain price action pattern to play out. Now we have to execute the trade. Okay, so here's some real examples in a real chart. Now, as you can see, every single one of these candles is a setup. So you can see at the top left here, we've got this candle here. Now you might be asking, well, this one looks a little bit like one. Well, either it wasn't in the 30% or we didn't trigger into the trade on the next candle. Therefore, we went to the next candle. I'll explain more about that in a moment, right? But essentially all of these signals are entry signals that I've told you about. You can see the 8 exponential moving average. This one touched it, right? This one touched it. Now this one might not be in the lower 30%. Again, I've shown some other examples where some people like to use the 50. Just bear in mind, if you use the 50%, you're not going to have as high a strike rate, okay? You're not going to have as high quality setups. You can see one here, you can see one here, you can see one here, and these are what the price action patterns look like, touching or being above that exponential 8 moving average in a bearish trend. Okay, so first things first, when we get our entry signal, we're going to use this one as an example, and this is a bench test, remember. Where basically we get our signal and we want, once the signal is closed, okay, so this will be on the changeover of the daily market. This is the daily time frame. Once we get the signal and we pull back into the 8 moving average, what we want to do here is we want to set a sell stop order. Now remember what a sell stop order is. A sell stop order is an order that won't trigger until price action pushes lower to that point that you've positioned that order and starts trading lower than the price it's currently trading. So it's an instruction to your broker to say, if we push lower to this price point here, which is lower than we're currently trading, please enter me into this position. All right. And then you're going to enter your position and you're going to get in. Okay. So your sell stop order goes in once the candle's closed. Why do we have to wait for it to close? Well, we have to wait for it to close because it might not be a valid candle, right? If you wait 5-10 minutes, it might not close in the lower 30%. So you have to wait for it to close. In the UK, that is around 10 p.m. at night, or it's at 10 p.m. at night. In New York, it's 5 p.m. in the afternoon, and anywhere in between, right? So you have to Google what is 5 p.m. Eastern Standard Time in my country, in my town, and you'll get the time that the crossover happens, okay? So because it's worldwide. So once the candle sets up, the execution is you put a sell stop order 2 pips below the low of that signal candle, all right? So if this closed at 0.1000, you put the sell stop order at 0.0998 or something, right? Okay, so it's 2 pips below the actual low of this, not the close, the low. So all you do is you bring on your crosshair, you hover it over that signal candle, and you say, right, okay, that the low of that candle was $1 flat. Therefore, my sell stop order needs to go at 0.9998, right? 2 pips below. You get the point. So 2 pips below for the sell stop order. Now you can see once you get triggered into that, you're going to want to set a buy stop order, which is going to be used as your stop loss. Remember, stop loss is just a terminology for an order. It's not an actual order, like order type. It's a terminology. All of these orders can be used as a stop loss. We're using a buy stop, which is the opposite of a sell stop, because it tells the broker that, okay, now I'm in the trade. If we push up to this price, higher than we're currently trading, I've accepted I'm wrong. I want to buy back my position. Easy? Right. So sell stop order to get in. Buy stop order, you guessed it, goes 2 pips above the high of the signal candle. Okay, so you can see this is below the low, this is above the high. And now we're in the trade. We've been triggered in the trade by the following day. So the last order we need to set is the target order. Now, you can have fun with this and go 2-to-1, 3-to-1 trades, but what I'm going to give you as a, initial target placement, some of you might set multiple targets on this, but what you want to do as an initial target is just go for a 1-to-1. Okay, that's a simple way to test it, because you'll probably find the most conservative and possibly the worst results doing that, but you're going to have somewhere to start knowing that it can only get better, because now you can start looking at multiple targets or, 2-to-1, etc. But what I've found is this is a very profitable system just trading a 1-to-1 anyway, because the strike rate's so high, particularly if you're using the exponential moving averages, the 30% rule on the candle body. 1-to-1 is going to be great. And remember, this is the daily time frame as well. So you're going to avoid a lot of rollover costs and things like that, because you want to get in and out. Okay, this is, even though it's just a 1-to-1 trade, this could take a day or 2 or 3 days. So you don't want to be in it too long. And I'm going to talk about fees and stuff later on as well. So target taking in this instance, we're using a buy limit order, because we're setting a limit order to buy back our short position. Okay, so we just set a buy limit order, and the buy limit order goes an equal measured move between the entry and the stop and the entry and the target. So you very simply measure how many pips it is between your entry and your stop based on the 2 pips below entry and the 2 pips above stop, and then you set that exact pip value to the target, to the buy limit in this case. Make sense? Now you'll see that there's lots of opportunities here, and it all looks fine and dandy. I do want to go and show you a real example that's playing out right now on a chart, just so you can see this in real time, and I'll walk you through the orders and everything. Okay, so just to recap the rules of engagement before we take a look at some actual intricacies on the chart. To recap, if you're looking for a sell signal, a short trade, first of all, you have to identify the bearish market. Okay, you have to identify that pin bar, or the open and close of that bearish signal in the lower 30%. You need to make sure that the moving averages are all in order. So the 8 needs to be nearest to price, the 8 needs to be below the 20, and the 20 needs to be below the 50. Okay, the next thing is to look for that pin bar and then get your entries set. Your sell stop order will go 2 pips below the low in a sell order, and your stop loss, once you're triggered in, will be 2 pips above the high of the signal candle, the pin bar. And then your target will be a buy limit, which will be in a 1-to-1 measured move from the entry to the stop. And of course, if you're looking for a bullish, you need to make sure that you identify the opposite, right? So a bullish market, a pullback down, then you need to look for a bullish pin bar, which is be the open and the close in the upper 30%. The 8 EMA needs to be above the 20. The 20 needs to be above the 50. Okay, and then you need to wait for a touch of that 8 EMA, or make sure that the signal's touching it or below it. Same with the bearish. Should have mentioned that. And then your target, sorry, your entry will go 2 pips above the high of the signal candle. Your sell stop order will go 2 pips below the low of the signal candle, and then your profit target will be a 1-to-1 measured move from your stop loss to your entry to your target. So that might be a lot to take in. You've got all the rules here. If you click on the link below, I'm going to give you the download for this trade plan that you can take. So go and download that before you move on. And now I'm going to take you into a chart just to show you an example of one of these setups. So let's get stuck into that. Now, before I show you the actual chart example, just quickly, I want to reiterate the fact that in a bullish trend or a bearish trend, when we're looking for these phase 2 pullbacks, sometimes, you know, as I said before, we're not going to catch the bottom and sell the top, or we're not going to catch the top and buy the bottom. It's very difficult to do that. In actual reality, what we're looking for is somewhere around here, right? So we might catch this on the way down. We might catch it on the way as it starts to retrace back up, as I showed you in the example just now. You're not going to pick the dead bottom. Now, some instances you might. I'm not saying you won't do that at all. And when you can do that, it might be that you only look for situations where you do catch the bottom somehow, right? But in reality, we're looking to get in around here, whether that's on the way down or on the way up. That's going to be the optimal place for getting in, and that's where you're going to be looking for these signals. So you don't just stop looking for the signals as soon as you start rallying to the upside. You can actually wait for the pullback touch of the EMA and get involved on its way back up, as long as the rules that I've just been over are all met. So let's take a look at the charts and I'll show you exactly what I mean. All right, so I've got a real live chart of the pound dollar in front of me. And you can see I've got the exponential moving averages on the chart here. And the way that I've set those up is color-coded the same as the presentation that I just gave you, just so you're familiar. The 8 is yellow, the 20 is pink, and the 50 is blue. And the way you go and set those up in Trade Nation is you go to your studies, you go to moving average, and then you can set, where it says simple, you change that to exponential, change the period, and you can change the color. And then you're good to go. Okay, so now we've got our exponential moving averages and our bearish chart. Okay, this is the daily time frame on the pound dollar. You can see it's bearish. You can see if you've trained your eye and you've watched part 1, you've got phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, and so on and so on and so on, right? We've got the runs and the pullbacks, and this is a very nice harmonically moving trend where previous support is becoming resistance, etc. But we're not here to talk about that. We're here to talk about this particular strategy. So you can see, just starting from the top left, that the moving averages are fanning out nicely here, right? So the 8 is below the 20 is below the 50. They're in the right order. The 8's closest to price. And you can see here there's a little area where it crossed over where we won't be looking for setups. And then here there's a crossover where we wouldn't be looking for setups. And then other than that, it's fanning out nicely where we will be looking for setups. Now, I'm just going to show you a couple of signals. Now, of course, this is in hindsight because it's the only way that I can show you this stuff. But this is pretty recent. I think this is, October. Yeah, so this is about in the last 12 months. Okay, so this is the daily chart for the last 12 months. Now, first of all, you can see we're in phase 1. We don't touch the 8 EMA. We start to pull back here. And now what we're doing when we're getting this pullback, we're immediately looking for that price action pattern. What do we need? We need it to test the 8 EMA. Then we need the open and close to be in the lower 30%. And that's when we're interested. That's our decide part. We're not going to execute any trades until the decide part's met. So we've identified a bearish trend. We've predicted that market's likely to go lower based on the exponential moving averages fanning out in order. That's a confluence indicator. Now we can start looking for the decide. Well, the decide, we need that candle. Now, the first signal candle you're going to see that could potentially be a setup here is this one here, right? Now, the reason this isn't a signal is because it actually closes in the 50%. The open and closes in the 50%, but it looks like one, right? This is where you might want to get your Fibonacci tool, zoom in on the candle and measure the candle body to make sure that we're in that lower 30%. So that actually isn't a valid signal, although it might look like one. And I wanted to show you that because this is the difference of looking at real charts. They're not as pretty. They're not as it's not theory. This is real practical applications, and it's always uglier when we're doing this stuff. So
you can see that's not a signal, that's not a signal, right? This one here, again, very, very close, but I've measured that out and it's not the lower 30. That's actually, it hits about 35%. And then you just keep looking through. So you got one here potentially, you got one here potentially, right? This one here. But what I'm going to do is I'm going to give you a very, very clear indication of what one meets the rules, right? So you can see as we pull back here, you can see that there's actually one. Here's an interesting one, right? So this one here is valid. Now that's valid because we pulled up to, we're up in that pullback phase. We touched the 8 EMA, the open and the close is in the lower 30%. But guess what? This one doesn't trigger. So you'd set your sell stop order below the low, but wait for the open of the next day, and the next day doesn't trigger the order. So you close that order off. That's the last rule of the trade plan. But guess what happens next? The next day is another entry signal, and you might have days where you get multiple entry signals. And this one, we set the orders again. So the order would have been 2 pips below the low of this candle. Okay, so you can figure out what the low of that candle was at 22.45, and you'd put your order at 22.43. Okay, which is 2 pips below. So your sell stop order would go here. Your stop loss order would go 2 pips above the high. So if the high of that candle is at 22.33, it'd be at 22.35, and your stop loss would be there. And then you just measure that, and you can use measuring tools or the fibs, as I said before. And then you just want a 1-to-1 target. All right. So you're getting in here. Let me just make this really, really clear for you. So let's color this in, and there you go. Right. So we've got our entries. Got our entries, stops, and targets all set. Let's delete that one off. And you can see it's a 1-to-1. You'd work out what a 1-to-1 is based on pips. And that's it. Like you can see this one triggered in, hit targets, and then stalled at that level. And then again, we've got another one here. If I show you this, you don't stop. Once you're out, you don't stop looking for these things. You've got one here. Okay, so that one then tipped the 8 moving average. You're going to have to double check to see if it did. You can zoom in. That one hit. We hit targets on that one. Again, got another pullback. I think there was, let's have a look here. So we've got none here. Remember, we're checking for above the 8 EMA as well. And you want to double check. It looks like I've lost my 20 EMA. Let's bring that back on. So we got our 20 moving average. Here they start to cross, so we wouldn't be interested in that. The 8 crosses the 20. We're not interested in that anymore. Okay, so this would, any signals in here would have been the last chance signal before we start crossing over. And then we start looking again once we fan out again. So we just go, right, okay, predictions that we're likely to continue is high again because we've pulled back. We've got a signal here. Okay, that one looks like it may have hit targets or may not. That's a tough one. You'd have to do the analysis on that. But this is how you go and test this stuff, right? You go and test the stuff, right? Here's one here. I'm not sure that one touched the 8 EMA. And that's another point. If it doesn't touch, it's not valid. Don't say it's close enough, right? You can't be half pregnant and you need consistency in your trading. So it has to be binary, yes or no. If it's not yes or no, it's not a trade. Okay. So hopefully that makes sense. You can see a couple of examples here on the pound dollar. This is one pair, by the way, and I've just skimmed through. There's probably 4, 5, maybe 6 opportunities here from April to October. So in a 6-month, there's probably one a month on this one pair. And then you've got 28 combinations of all the major markets to go and test, plus indices and other markets. So you can see that if you can just grasp this and know it, know the ins and outs of this strategy, bearing in mind this is the daily time frame, it takes you 5 minutes to check through this each night. You can really start to stack up multiple markets, and it doesn't really take a lot of time to do that. And you can end up with a phenomenal trading strategy that doesn't take you a lot of time, and you're getting 1%, 2%, 3%, 5%, multiple markets if all these trades play out. So it's a phenomenal strategy. All right, so now you're familiar with a strategy and you've got something I'm sure you're excited to run off into the charts and start testing or trading.
don't do that just yet. Let's go through this video the right way. Now I'm going to go into a platform called TradingView, and I'm going to show you exactly how you can take everything you've got at the moment, implement that into TradingView, which is a phenomenal platform. Lots of people have given me message requests and things to go through this platform, but I'm also going to show you how to integrate your broker. I'm going to talk about broker integration, and I'm going to be talking about how Trade Nation integrate with this platform as well, should you want to. And then I'm going to show you how to use this platform to really level up your trading using all of the cool tools and features and tips that are going to really you're going to benefit from in your trading. So let's get stuck in.
All right, so some of you may already know about this platform. This is TradingView, and due to popular demand, I'm doing a segment on TradingView because not only is it a very powerful platform, it's very cheap, it's very accessible, it's got every feature that you possibly need. And what's more is you can integrate Trade Nation or whoever your broker is with this particular platform. And I'm going to share with you some basic features. I'm going to share with you some navigation tips, how to get everything you need out of this platform to work on and develop in your trading based on what we've been over so far. So I'm going to be walking you through this. I'm also going to be doing a further series on this particular platform, showing you guys all the different utilities and features and all the rest of it. So definitely subscribe to the channel if you want to see that, if you're not already. Before I get stuck into this platform though, because what we're going to do now is we're going to show you guys a setup. We're going to look for a setup. I'm going to show you how to put all the indicators on that you need, how to measure the right candle signals, how to use the EMAs, how to really build your discretion in this platform. I will give you a word of warning. This platform, as powerful it is, it's got tens of millions of users right now. When I started using this, it had like a couple of thousand, and now there's like literally 50 million plus users of this particular platform. And it does have a social aspect to it, meaning there's a forum. And I would advise you, as a word of warning, to stay away from trading forums. They are absolutely toxic, poison, signal services. Everyone's got an opinion. And particularly for newer traders, if you go into a room like that or an environment like that where everyone's telling you that they know best, it's going to cause you a lot of distress, a lot of anxiety, and you're not going to be focused on the goal at hand, which is becoming a consistently profitable professional trader. Okay. I'll say this, every single professional trader I've met does not tell you what's going to happen or if you're right or wrong in your analysis, because professional traders appreciate that there's thousands of ways to make money in the markets, and none of that actually matters. The technical setup, they don't have a first clue about what someone else is developing as a system, so they don't care, right? So anyone telling you that they know what the market's going to do or putting out trade ideas and all the rest of it, just block it out. It's noise, it's rubbish, and there is an element of this platform where you can get lost in that. So don't say I didn't warn you. Let's get stuck in. So the first things first, below this video is a link. And if you use that link, you'll be able to sign up. Basically, they do a partnership affiliate program on here where if you recommend a friend or refer a friend, you will get, I think it's $15 or something for everyone that signs up. So if you use that link in my description to open an account with these, then it's a great way to support this channel. You know, I'm not really benefiting from it, but it's keeping it all in-house, and hopefully you got some value from this. So if you're going to open an account, there you go, $15 in the kitty. So do that. Go and use the link below. Sign up to this platform. The next thing I'll say is when Black Friday, Cyber Monday comes around, this platform offers great deals. So one of the things that I like to do, and again, this is a wealth creation tip, if you like, because you want to save as much money as you can, grow as much money as you can. When Black Friday, Cyber Monday come around, they do like get 3 years for the price of one, or 2 years for one, or whatever it might be, but it's a really good discount. We always make sure that we upgrade all of our software subscriptions on Black Friday because they tend to give the best deals. This is one of them. This one really gives a good deal on Black Friday, Cyber Monday. So if you're signing up now, doesn't matter. A couple of months' time when Black Friday comes around, you can renew your membership and get a really good deal. And what I would say is if you're serious about trading, this is a relatively cheap platform. If you go to the pricing, you're going to see that it's, I think it's free for starters, but if you start getting the different subscription models, the professionals, like you can get a pro for like $19 a month or something like that, which is ridiculously cheap if you're serious about this. Aside from trading, I use this for the stock screeners. I use my stock pick. I do stock picking on this, general analysis. It's just great for market views, news, and things like that. So it's just a great tool to have if you're serious about building wealth in investing and trading. I would consider it. But if you use the link below, you can sign up for the free account and what have you. So let's get stuck in. So I'm going to get straight into the products and go to super charts. Right now, this should look pretty familiar. On the right-hand side, you've got a watch list. Now, your watch list might look a bit blank, and the way that you add to that watch list is you click plus and you say euro dollar, okay? And we're going to add the euro dollar to our watch list. So you can see here that I've got my euro dollar selected. Now, you should be familiar with this. You can build out your watch list. I recommend going through the list and putting all 28 combinations of every major pair on the right-hand column. You can screenshot mine and copy mine, but I put all different markets in here. I've got SJM, which is Schmuckers, which is one of my investments. I've got lots of other markets. Sometimes I just look at markets for the sake of it. You know, we've got some other some stocks in here that I just keep an eye on. So it's real, it's not relevant to you, but the next thing you want to do is find yourself familiar with the chart. Okay, so we know that we've got the prices down the right-hand side. We've got the crosshair here. We've got the time down the bottom. Now I'm going to go up here, and what you can do is just go on the daily time frame. This is where you select the time frames. We're looking at the daily for this particular strategy, as you guys know. And then you can customize this to whatever color you like. So I'm using white. If you prefer dark mode, you can use dark mode. You can change the colors of the candles. You can change the colors of the canvas, the background. You can put lines, grid lines. You can really go to town with it and customizing it just how you like it to suit your preference. So that's really the aesthetics. You can go nuts on all that stuff. Down the right-hand side here, you've got alerts. Okay, now an alert is something where you can actually set an alert on the chart and it will text message you or email you or make a audible noise. Just like this, you can just put add alert. If price crosses that, you can set it to crossing or cross up, cross down. Again, I'm not going to cover this in this video, but I'll do that in later videos. These are really useful tools that you can use in your trading if you don't want to be glued to the charts all the time, which I'm assuming most of you don't. All I'm going to go through here is this bit here that says chats and ideas stream. That's the forum side of things that you just want to stay away from. Yeah, just don't open it. It's horrendous. It's just a forum of toxicity. If you want to hide the watch list, you just tap this button here. I like to have it there because I'm using a big monitor and I can see everything clearly. Over on the left-hand side, you've got all of the tools. So this looks familiar to the Trade Nation setup. And you've got some other things up here where you can select, you can change the pair there, the market there. You've got some indicators that we can add, which you can see I've got the EMAs on here as well. And you got some templates and stuff like that. Bar replay is great for testing. The charting package got 360 rotational view, which is great. Down the bottom here, I've got the RSI indicator on here already. And I've got the ATR because I like to see what the average true range is of each pair. Now, let's get stuck into the actual nitty-gritty of this strategy that we've been looking at. There's the navigation for basic. The last thing you're going to want to know how to do if you're looking to integrate a broker account. Now, if you go down to here, let me just sign out of this quickly. You can see I've got a paper trading. Yours will look like this. If you click on trading panel, you'll see a bunch of brokers. Okay. Now, Trade Nation is one of the brokers that integrates with TradingView. So if you've opened your Trade Nation account, you literally just click on Trade Nation and there it is, job done, you get it done. You can also run a paper trading account if you want to just use the own TradingView demo account. Okay, if you've got another broker and they're in this list, You just click on your broker, select them, and you can log in, right? All it's going to do is ask you for your login details. You put in your username, password. It'll go through a couple of questions, link it in. It's as simple as that. Yeah, I can use, or you can just connect the paper trading account if you don't yet have a broker. Okay. And here is going to tell you all your positions, orders, history, account history, journal. And this is just a paper trading account I use for demonstrations and things like that. Right. So paper trading, just to tick that down, we're now connected to paper trading. And what we're going to do is just have a look and see if we can see any setups based on the strategy we've just been over in real time. So I'm going to remove all these drawings. All I've got left on this chart now is just the exponential moving averages. And you can see we're going through the phases here. Let's take a look at another market. Let's take a look at the pound. Let's just remove all these drawing tools. First thing I'm going to do as well is just alter the colors of these, because I'm going to keep the 8 in yellow. Again, you just add them like this. By the way, you can just click indicators, typing EMA, moving average exponential, and that will add that into the chart. You can see it's just added this this one here. Okay, so you can just delete that off if you're not using it, but you just double click on that and it will tell you that is the 9 moving average. It calculated on the close, which is how we leave it. Style is the color you want it. And it's already an exponential moving average, so we can just leave that. But I'm going to delete that one off because I've got my 3. But what I will do is I'll keep the colors the same as we used them before. So I'll make this one yellow. I'll just make it a little bit of a darker yellow. The 20, as you see, this is the 20. I'm going to make this pink, which it already is by the looks of it. Let's just make it a little bit of a lighter pink. Okay, and then the 50, just double check it's the 50. I'm going to make a blue as we did before. And now this all matches, everything's uniform, everything's as it was. So now what we're going to do is look for a daily chore, right? A setup that we want to identify as our strategy, right? So I'm going to flick through some of these pairs and see if we can identify a nice trend continuation setup. Okay, here's an interesting one, because at the time of this recording it's Friday afternoon and the markets start to slow down on a Friday afternoon. All the institutional traders go away for the weekend, start winding down, celebrating their huge profits, and it starts to slow down a little bit, right? So this is an opportunity that could play out into today or over the weekend. You'd have to hold it over the weekend and then, get the profits on Monday or Sunday night's open. And here it is, right? So this is the dollar yen. If I show you the signal setup, it's here. We're in a nice bullish trend. We are pulling back in phase 2. We've pulled back. We've touched the 8 moving average. Okay. We've got our nice pin bar. There we go. Perfect pin bar. Open and close in the upper 30%. Because remember, we're looking for a bullish setup. And you can either do that by using fibs. Okay, so let's just bring on the fib retracement tool, which is this one here. And you can go from top to bottom. Whoops, sorry. It'll be bottom to top, sorry. So bottom to top. And you can see that it's up in that upper 30%. You can add 30% to this, or 33.33, and you'll see that there's 30%. It's up, open and close in the upper 30%, right? So that's a valid signal. We've got our bullish move. We've got our nice fanning exponential moving averages. We've got our pin bar set up. So our order in this case, and this is a trade that I'm actually in, went in, our buy stop order went 2 pips above the high. So you can just hover your crosshair over this candle, and you can see at the top there, it says OHLC, and it's all got numbers next to it. Okay, what do they mean? Well, that means open, high, low, close. So the high of this candle I'm hovering over is 147.56. So my order went in at 147.58, my buy stop order. So 147.58 is where my order went in. And of course, the market, today's candle, Friday's candle, this is Thursday's candle, this is Friday's candle, I was triggered in today into that trade. So then as soon as I'm triggered in, I get my stop loss in place, right? So my stop loss goes 2 pips below the low of the signal candle. So if you hover over and check the low, you can see up there it says 147.01. So I go to 147.99. Now, some people, if there's an even handle number, so like 147 flat, it's always wise to give a little bit more breathing room. Some people like to go 2 pips below that, which would mean a 3 pip stop loss on this. But for the sake of this demonstration, we're just going to do it as per the rules. So we're going 2 pips below the low of this candle. This is our entry. Okay, so this is the thing I love about this trade is it's in play, and there's no way I can hide or show you winners only, because there's always going to be losing trades as well. But what I want to show you is how you can start setting these things up, right? So we've got our entry at 147.58. We've got our stop loss at 146.99. Now we need to set our profit target. There's a couple of ways you can do this, okay? This platform has these long and short position tools. So if I click on that, what I'm going to be able to do is click on the price that we got in, and boom, just like that, we get this nice ratio tool, our risk reward tool, and it tells you when you're at a 1-to-1. So you see right there, risk reward ratio 1-to-1. That means this price point here, 148.17, is exactly a measured move of the stop loss. It will tell you the exact amount, right? So you see 59 pips, 59 pips. Great. It tells you what you're risking, right? It tells you everything. Lots of great information on here that you'll find useful. The other thing you can do is use a ruler. So you go from the entry to the stop. As I said, you see it's 58 pips, 58.4. So then you would just say, okay, well, I need to go 58.4 from my entry, 58.4. Or you might like to just get over a 1-to-1, just over a 1-to-1, right? So you go, okay, well, that's 58.4 there. So that's where I need to get in, right? And so on. Or you do it mathematically in your head. Or you can just do it with fibs again, right? So you just bring on a fib, go here, and then you say, right, I'm going to use 50% is where my entry is. Here's where the stop loss is, and you can put the 100% on there, and you can do it that way as well. I don't recommend doing that. That gets a bit finicky. Best way is just to use a 1-to-1. The last way that I'll show you to do it, which is quite popular with traders, is to go to the rectangle tool, okay, and just draw on manually. So you got your entry here. You can draw this rectangle tool, and then what you can do is just clone this, or Control C, Control V, and then there you go. You've got your nice little 1-to-1 there, and you know exactly where to put your stop loss. If you want to be a little bit more, crucial and critical about it, then you want to do it mathematically, use a ruler, or use the long position tool. So for this example, I'm just going to clone this just to show you guys where the target would be. Okay, and the target would be right here, and we'll color this in green. And there you have it. So I gave you a bearish example using the Trade Nation platform, and I showed you a real live example. This is a bullish example that's right now in play, and we're actually in this order right now on my live account. This is the trade that I'm actually in. Hopefully it plays out before the weekend close, because I don't like holding trades over the weekend. I don't mind if it's on the daily time frame, but I'd still prefer not to. But this is a trade that I'm in, and hopefully if this is a 1% risk, because you've calculated your position size correctly, and you've got in, if you've got in correctly based on your account size, and you're risking 1%, then this will be 1%, right? If this is 0.5%, this will be 0.5%. So this could be a 1% trade over the weekend, which would be lovely, right? That's one pair that we've looked at out of 28 combinations. Now, before you run off and get excited and start going to test some of this stuff, I just want to show you one really important thing, or a couple of important things that will help you along your way. This is the New Zealand CAD, and you can see on this pair, we've had quite a few entries recently. We had one here, one here. We've also had one here, which is above the 8 EMA, which is a winner. We had another one here, which was a winner. And now, right now at market, we're just about to set up a new one, potentially. And I say potentially because of course we've got to wait for today's candle to close for this, literally this candle that's in play to validate as a signal that's useful, a verified signal, a valid signal. So we can't take this yet because it might close above the 30%. But if it closes now, if it was to close now at where it is right now, this would be a valid signal. So this is one for Sunday night to come back and get your orders on as the market opens again. So this is a trade that's really fresh right now, and you can go and look at right now. Now, there's a setup for you, but what I wanted to show you was sometimes when you're testing some of these and you want to see it, like if you're going back and doing some testing in hindsight, you want to use some of the bar replay features because it'll get you more of a realistic feel. And it's really easy to use. You just hit the replay button up here and you can select the time. So this is going to be 1 UPD per second. And you can set it faster, 10 per second. But if we just leave it on 1 and we just hit this button here, you can select where you want it to play from. And then you can just hit play and it will just show you every second how the candles played out. So you can practice in real time seeing valid setups. And which is a really cool thing to do, particularly if you're new to this stuff. You can see it in real time because it's one thing to see them in hindsight, but another thing to see them in real market time. And this is kind of a simulation that will show you that kind of thing, right? Now, there's one more thing, because sometimes you'll arise at a situation like this one, for instance, where you don't know if it pushed down and triggered your order before you got stopped out, say. Not quite this, but you know what I mean, right? Let's just say this one, you don't know what happened first. You don't know if it pushed down and you got into the order and then stopped you out. Because on this one, you'd have let's just say, for instance, this was an order. It's not because it doesn't hit the 8 moving average. But let's just say that you got your order in here and then the next market, it looks like it triggered you in. But when you're testing and it's historical, you don't know if this pushed down first or it pushed up, which would invalidate the trade anyway. You wouldn't be taking the trade in the first place. So sometimes you can arise at a situation where you go, I don't know if this was a winner or a loser, or would I have taken it in the first place? So the best thing to do for that is to see what order it played out. And of course, you can do that by going down on a lower time frame. So I can see that this is the 16th, Wednesday, the 16th of August. I can literally just go down to the hourly chart, right? Or the 15-minute chart, go to that same time, 16th of August. There you go. There's my bar. And you can basically see what happened. Did it go up first and then down? And in this case, yes, it did. It went up first, invalidated the trade, then pushed down, and I wouldn't have been in the trade anyway. Makes sense? Because it's gone above where my stop loss would have been. So it invalidates the trade. So I wouldn't have taken that trade. Whereas if you was looking at it, you might have thought, I would have got in, it triggered me in, and then it stopped me out. See what I mean? So it makes all the difference. So it's a little trick to make sure you're getting accurate backtesting results, because that's the most important thing that you get. The purpose of backtesting is to lower your expectations, as I always say, not increase them. So there's a nice little setup for you to watch out on the New Zealand CAD. So now what I would advise you do is pause the video here and go and take a look and see if you can find any entries, see if you can find any setups. It doesn't matter if they're historical. You're going to find tons of these things. Go and find the historical hindsight ones, and then you can train your eye to see them in real time. And then when you come back, we're going to be talking about testing and journaling a little bit more on this. But before you go, just one last thing on these features here. Some of you are asking what these little flags are. Remember I showed you guys Forex Factory Calendar? Well, these are similar news events that just get printed on the charts. And it's really, really handy because it tells you when they're due out. So if we go to another pair here, you can see that due out in the future, we've got the Bank of England interest rate decision here, 21st of September at 12 o'clock, and the forecast and the previous. So it's really good at a glance just to have access to this information so you know what's coming up and whether or not you decide to stay out of the trade. So this is TradingView. Go and open an account using the link in the description. Familiarize yourself with it. Set up your watch list for all of the pairs that you want to take a look at or go and test. And let's do this together. Let's go and try and find some of these setups together. And I'll come back to this in just a bit. Once you've done that, save the video, bookmark the video. And in the next section, I'll talk about journaling, testing, and we're also going to be talking about unnecessary fees. So it's very important that you carry on watching this. I'll see you when you get back. All right, have fun. Welcome back. I'm glad you're back. Now it's time to get into some serious business. And I say that because trading is a business, as I went over in the previous part 1. And I want to touch on journaling and how it can really help you improve your trading. I'm going to talk about some backtesting concepts using this. I'm going to give you an example. I'm also going to give you a couple of tools that you can actually download as well in a minute. First of all, I'm going to go through it. But the reason this is so important is because this is the bit that most traders skip, and this is the reason they aren't successful. This is the reason that 90% of traders fail, because they don't do this bit. So I just want you to promise me, and I want you to put in the comments right now, I promise I'm going to do this bit. If you're serious about trading and you've watched all of part 1 and you've watched all up to here in part 2 and about an hour in, I want you to comment below and say, I am in, I'm doing this properly. I promise to commit to this. I'm serious about this, because that is an affirmation in itself, and it's going to give you some accountability by putting it in the comments there as well, because we're all watching you, right? So first of all, we can all test our data. We go back and one by one, we check through what trade played out, and we enter as per part 1. I told you the date, the time, where we got in, where we got out, if we made any, if there was any news out or any notes and things like that. And we can really get a good idea of the win-loss percentage of our system, our performance of our system historically. We can even use that data to then look at equity growth and how aggressive we can, increase our position size and what that's going to do to our equity curve, and et cetera, et cetera. But the beauty of that is it gives you all of the data for your mental psychology, for your mental stability going forward, because you've got in black and white to say, this system has been profitable in the past. So if all I do is trade it exactly the same as I tested it, there's a high probability, in fact, there's a exact probability of X% that this should be profitable going forward. Now, that's great. But what about when you do go forward? We have to keep journaling the trades, not just for technical performance, but for your own self-review, your performance. Because there's going to be times where you start to lose your edge. And there's going to be times where you can use this information going forward to review on a quarterly basis, and not only review yourself, but then review the figures. Where are you leaving money on the table? Where can you be a bit more aggressive? What about your stop loss? Is it optimal position sizing? Is your target optimal? Is the candle signal that you're looking for, is that optimal? Are you looking for it on a pullback or anywhere on the pullback or run? And does that make a difference, right? How you increase your position size, does that make a difference? Are you too aggressive on that? And it's causing you to have a big, maybe you increase your position size after a big, winning streak, and you increase it too much. And because of that, the next losing streak causes you to lose more of your account than you need to. All of these things are an ongoing process as a trader, and these are things that you have to stay on top of forever. Okay, it's not you just take a strategy and trade it into the sunset and now you're a trader. That is not what makes successful traders successful. I just want to get that out of the way. So, journaling, what is it about? I've done a full series on trading journaling. I did a 4-part video series on trading journaling, and you can go and watch this. In fact, go and bookmark this now and watch it immediately, or watch it after this part 2. But definitely stick those in your library, all 4 videos, and go and watch all those, because they go through in very, a lot of detail. But essentially the purpose of journaling is what gets measured gets mastered. So we're talking about, what you should be looking at in terms of recording when you're trading. And I went all over that in the backtesting. It's basically the same. You want to be looking at the entry date, the entry time, the currency pair, the trading system, the type of entry, the time frame, as much information as possible. Your entry price, your target price, your stop loss price. If you've got multiple targets, all of those. You want all of those things, all of the errors made in your live testing. Of course, in your back testing, you don't make errors, but in your real trading, you do. So it's self-review as well. So you can go on to look at, we've got trading journals, which I'm going to give you a download in the description of this, but a basic trading journal would just be reviewing yourself, how you felt on a scale of 1 to 10, how desperate were you to get in the trade or fearful to stay out of the trade, and scale that on a 0 to 10 basis and only enter trades when you're on a 5 or a 6, say. How you felt when placing the trade, how you felt when exiting the trade, what mistakes you made, the details of the mistakes, the screenshots, what actions have you taken to improve? Because ultimately your self-review comes down to the goal is to trade a trade plan flawlessly as per your back testing. So you want to be tracking any excess loss, any bigger losses you take than you should have. With your trade plan says 1%, you should be noting all the trades that take more than 1%. You want to be taking note of any errors in your trading, and you want to note what you gained or lost as a result of those errors. You want to look at missed entries. You want to look at trades that you were in that shouldn't have been in, and you want to look at trade management and all of the, any money that you've gained or lost as a result of not trading your trade plan flawlessly is an error. And, you want that to be zero errors every single month. That's the whole point of journaling. And also, so that's your self development, but on the technical side, on the figures side, right, the profit side, not only will your emotions cause you to lose or gain profit, luckily, but your performance of the actual strategy itself as well. You want to keep track of that because you can lose your edge, right? So you can lose your edge. So guess what? If you journal your trades, you can look at the back testing and go, actually, this is declining from my back testing, or this is getting better than my back testing. And then you can ask yourself, am I still trading it the same way? Or if you go through a big drawdown, you can say, am I still trading it right? Am I still on track? Is this right? Is 4 losing trades in a row normal? Is 7 losing trades in a row normal? Well, you look back at your back testing and you say, well, your journal trades and say, well, every year this has been the case, so it's pretty normal. And it gives you that mental stability. Another reason is you can look at different targets and you can start to see how aggressive you can become. What money you're leaving on the table as a result of being too conservative, or not giving your stop loss enough breathing room, or taking a target too soon. Can you take targets further away? All of this stuff is mega important, okay? To the point where you can literally go onto your spreadsheet and go, okay, well, I can look at August. Is that profitable? Perhaps there's a certain pair that isn't profitable and it's death by 1,000 cuts. It's causing me to lose some money. And if I just wipe that pair out, I'll be profitable. Perhaps there's a time of day that a certain strategy doesn't perform very well. If there's a certain month or a certain day of the week, right? A certain news event. All of these patterns are what you need to keep on top of to develop an edge as a trader. And this is what no one talks about. This is what, this isn't sexy. This isn't something you can sell. This is why I'm giving it to you, right? This is free information and I need you to know it because I'm sick to death of traders just blowing money unnecessarily because you don't need to, right? So what do we need to do? We need to keep track. So I'm going to run you through an example here, okay? And then, as I say, what you can do is once you've got all the journal trades here after a quarter of trading, you compare to your back testing and you say, well, okay, win percentage has gone down a little bit. Strike rate's gone down. Maybe strike rate's gone up. Maybe I've made a few errors. And you're just on top of it. And it gives you peace of mind. So what are we looking at here? We're looking at some trades. Let's just take a look at one trade and I'll tell you how to fill this out. Let's get stuck in. So let's just use this one as an example, right? You can see here that this would have been the first trade in this bit on the screen here, right? You could use this one or you could use this one, whatever, right? We're going to use this one. So this is the 18th of August. What we're going to do is we're going to go straight in and we're going to say, right, on the 18th of August, 18/08, 2023, okay? That's the first date. Now we're just going to go back to our chart, and we're going to say we entered the trade, and obviously we got in on the close of the candle. So in the UK, the open of the next market is 10 p.m. All right, so we just literally go, what time did we get in? Well, it was 10. In fact, I'll just use 24-hour timings. Currency pair was the New Zealand dollar CAD, I believe. New Zealand CAD. Yep. Okay, next up, we go, what is the chart interval? We know that's the daily. Why are we recording this? Well, as I say, if you've got multiple time frames that you trade, we can then use this data and then use pivot tables to say, can you tell me what's the most profitable chart interval, right? And if you don't track it, you don't know it. So what gets measured can't get mastered. Like if what's not measured can't get mastered, what's measured gets mastered. So you track as much as possible. We got the chore system, which is the name of this strategy. I called it the daily chore. Type of entry, pin bar. Now in here, you could put pin bar 30%, pin bar 50%, right? Pin bar 20%. You might even trial pin bar dojis only, right? In the lower 10%. You might even just put hammer candles. So you can start tracking the types of entry signal. Average true range and CTS, we're not going to go into that in this. It's kind of irrelevant for this strategy. Entry price. So now you'll just go back to the chart and you say, right, okay, well, once this candle entered, I entered 2 pips below the low. And in this case, it was 0.8 flat or 0.8009. Okay, so we're going to say entry price was 0.8009. That was our entry price. And our initial stop loss, obviously, is 2 pips above the high. So here's the candle here at 8053. So we're going to be 8055. This does get a lot quicker, particularly if you have the spreadsheet on one side and the chart on the other side. It does get a lot quicker, I promise you. But this is why you can start to see why people don't do this. People don't do it. So 8055, 0.8055. Okay, and then our target 1 price. Okay, and remember, this is journaled trade. So we're pretending that we've just taken this trade this week, say, or today. I recommend that you journal on the day of the trade. And when you close it out, you complete the journal. So the target price would have been a 1-to-1. So if we're at 55, it's basically 55 pips below this. So let's just say 7. Let's just bring on. Let's do it as I said, right? So we're going to enter at 0.8 here. Stop loss is going to go above the high, which is at 8055. And then we're going to look at a 1-to-1. Okay, so this is the way I do it. Literally, you can do it like this. There's a 1-to-1. So the price that you're getting is 7963. Okay, so 7963. Target 1 price, 0.7963. We don't have a target 2 price, but you might. You might have another target price. Okay, target 3 price, etc. Then the close date. So the close date is when we get stopped out, right? So look, you can see that we didn't hit targets and we actually got stopped out on the next day, which was the 22nd of August 2023. So we just literally go down here and we say close date 22nd 08 2023. Close time again is going to be, that could be any time in the day. So if you did want an accurate time, you go back to the chart and you go down a time frame and you would find that. I'm not going to do that in this video because it would just take too long. But let's just say this moved up and at about I don't know, 3 p.m. or something, we got stopped out. You find out the exact time, and I recommend you do find out the exact time. We can just put 1500 hours in here, and the position exit, right, is where you exited. So this is going to be the stop loss or the target. Okay, in this case, it's going to be the stop loss price. So it's 0.8055, 0.8055. Right, bang, got that. Now, chart notes. You can put any chart notes here. You can say, oh, there was news out, or there was some kind of news announcement, or I had, you know, I got in late or whatever, or there was a bit of volatility, something happened, any relevant chart notes. Rules followed. That's where you want to 100%. Did you follow the rules of the trade plan? This is going to force you to self-review. If you see a lot of no's there or 0%, that's going to make you buck your ideas up, right? That's a reason that you're not profitable. Errors made. Did you make any errors? Human error, okay? Remember, excessive loss, management, things you shouldn't be in, trade you shouldn't be in. Then you can see that this particular trade was a 46 pip loss, okay? Next one, we go on to the next one. We do exactly the same thing again. We get another trade come up on, you know, a couple of days later. This is 4th of September, and we do exactly the same thing, right? Entry price, 2 pips below the low, time, date, etc. I'll speed this up and I'll enter the next couple of trades right now. Okay, so I've just filled in 3 trades literally from the last few weeks on that New Zealand CAD, and you can see I entered the first one here, which was a loser, second one here, which was a winner, third one here, which was a winner, and then of course we've got our one that we're watching right now, which hopefully can be another winner. And if it closes below this previous low, by the way, on a side note, that's a good indication that it will go lower, because that's a lower low, lower close. But there's another one, you know, there's a couple that I've missed out, but the last couple of weeks on this, we've filled in, and what that looks like here is this. So we've got 3, and would you look at that? We've got a similar win-loss percentage. Now, I'm not saying that 3 trades should make your mind up about it being close enough to your back testing. Of course, I can't sit here and journal every trade for weeks on end. This video would be, you know, I'd have to do that in real time. I want to show you how to journal and the importance of journaling and how you use it to continuously develop your edge over the rest of the other traders, because that's what we're trying to do, and how you can be consistently profitable long term. Okay, so that's the importance of journaling, guys. And I just want you to make sure that you go and watch the other series of videos on journaling, because that goes into a lot of detail on the other aspects that are important. But I just wanted to give you a real practical guide as to why it's important. And then guess what? You can start looking at your live equity now, and you can start increasing your position size, or keeping track of your equity curve, or knowing when to be a little bit more aggressive on increasing your position size. Okay. And then you've got this equity curve to show to investors, attract investors and things like that. Right. So so much benefit to doing this stuff. And then after a quarter or a year, you go to the tune up and you can start using pivot tables and say, right, I want to compare currency pair, chart interval, trading system, date, time, month, you know, entry price, initial stop loss, and you can start using these tables to start seeing where you're leaving money on the table. That's what I want to get you excited about. I want you to understand that there's a bit of work to do here, and this is absolutely necessary. This is required for you to be a profitable trader. So just to summarize, it's going to allow you to review yourself and make sure that your emotional performance and your self-performance is getting better. It's also going to allow you to journal the system and strategy performance to make sure that that is still getting better and better. And when you combine those two, that's how you consistently get more profits. All right. So that's it. I promise not to beat on about journaling anymore. But what I do want to talk about right now is fees and how that affects your trading. All right, I hope you're enjoying this as much as you enjoyed the first one, part 1. If you are, let me know in the comments. It really does help to know that we're on the right track and everyone's getting value from this. And I'm going to consider doing more of these. You know, I'm doing a stock picking for beginners. I'm going to be doing a start a business for beginners. And I'm going to roll this series out with this level of detail across all of those I've had success with. And I'm going to share with you guys everything I've learned. So if you're enjoying it, take a minute to just let me know in the comments. And also, don't forget to subscribe and like this video. Lots of people just watch this video, don't give it a little like. take a second just to do that, please, and that'll really help the channel. Okay, I'm going to talk quickly about fees and why they matter, because the whole point of me putting all this energy into these videos is to help you grow wealth and keep your money and grow your money, okay, and not give it away and lose it, okay, because I've had so many messages from people losing money. I don't want any more of that. This is my gift to the trading community to make sure that I eliminate that, or at least reduce it as much as I possibly can. All these horrible guru people out there taking your money, they don't care. You know, they don't care. They're narcissists, and they've got no intention of keeping your best interest at heart. So let's talk about fees real quick. The 4 main categories that affect you donating money back to the market is silly donations, which is basically trading when you don't know what you're doing. Having the urge to trade live money without having a proven system that there's no excuse for you not to have one, other than the fact that you've got a fear of missing out or something. Just take the time to test the system and go and, tweak it, and then start slowly. The results are exponential. People they completely overestimate what's achievable in a short period of time. And then when they realize there's a bit of work to do, they underestimate what's achievable in a 2-year, 3-year period, which is exponential growth. Okay. The rollover costs, people just placing trades, negative carry. There's actually positive carry, which you can use to your advantage, which I'll go over in a later video. But rollover costs are where the broker's charging you to be in the trade on a daily basis every time, and you're not aware of that. So even when you've got a profitable trade, it's not as profitable as you thought, and you don't know why. That's because of rollover costs. Spread fluctuations, that's where unethical traders just change the spreads during the Asia session, or when you're not looking at the charts and everyone's gone out for dinner, they change up the spreads, and it's crazy, which is another reason why I love Trade Nation, because they honor their fixed spreads. So even if you're paying a little bit more, it doesn't matter. I'd rather have fixed spreads and know where I stand and have certainty in my projections. And then tax, okay? People don't do their tax properly, or they don't feel like... I just touch on tax real quick. I'll knock this one on the head straight away. Tax on trading. Again, I've done a whole video with a broker and an accountant. You can go and watch that video right here. And I think it's about an hour long, but you can go and watch it, and it's really informative. But ultimately it comes down to this. Check out with your accountant, even book a free meeting with an accountant and lawyer, talk about what you want to do, and they'll give you the best advice. But in the UK, you can open a spread betting account, which is classed as a gambling account. That's the only difference between a spread betting account and another, a CFD account. It really makes no difference to what you can do in the account, except it's classed as gambling. So the Inland Revenue here in the UK will class it as gambling, and they'll say, okay, you're not taxed on gambling profits. Great. But you're going to be investigating on a case-by-case basis. So first of all, you have to have a primary income of at least 15 grand, right? So you have to have another job, basically. Second of all, there's a limit to how much you can have in that spread betting account of 100 grand. Now, if you was stacking shelves at Tesco for 1 day a week, or Costco for 1 day a week, and you're earning 5 grand a year doing part-time 1 day a week, and you're earning 70 grand on your trading, they're not going to class Costco as your primary income. They'll say, come on, you're earning more from trading than you are in Costco. This is your primary income, so you need to pay up. You need to cough up the tax. And that is where you don't want to get caught out. You end up giving back a big fine, and you're giving it all back. You're not going to be better off over time. So get all this stuff right, get it clear, know where you stand, max out your spread betting account by all means, but then consider, making sure that you're keeping tabs on all of the tax on profits. Now, I do talk about reinvesting money and how you can not pay tax or defer your tax because you're putting it into new investments, but that's a whole other course, and I'll talk about that in another video. Let's talk about silly donations. Silly donations are just literally blowing the money without knowing what you're doing. That's it, okay? Rollover costs, I've already explained. Spread fluctuations, I've already explained, and tax, I've explained. Now, why do fees matter? Let me give you a real example here of why fees matter. So let's just say that you're investing $200 a week for 50 years. You've heard all these gurus say, if you invest $200 a week for 50 years, you'll be a multimillionaire, blah, 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 right? Now, let's just assume that there's a 4% inflation rate, okay? So you're going to increase that 4% annually to counter that inflation. Well, if you was to get 8% return, after 50 years, you'd have 11.6 million net worth. Great. That's factual, okay? And that's what you'd have. Now, let's just say that there's a fund that performs identically to that, or you perform exactly the same, identically to that performance, but there's a 1% fee difference, all right? So 7% net. Well, you end up with 8.4 million. And although you might not care about that because it's still 8.4 million, that's still a 3.2 million pounds difference or dollar difference. But here's where it really matters. Let's just say if you invest 20% of your income at an 8% return per year, that will take 27 years to replace your income and become financially free. Now, if you do the same thing at a 7% return, it will take you 34 years. Now, that is a 1% difference, but a 7 years that you have to work for longer than the person who retired 7 years ago. Imagine what you could do with 7 years, in 7 years. That's a long time, and that is just a 1% difference in fee. Now, where might you see a 1% difference in fee? In your broker fluctuations, okay? So you only have to be wrong and give silly donations and pay rollover costs and pay stupid spread fluctuations to the degree of 1% difference, and it can have an astronomical effect on your trading returns over time. So I just want you to bear that in mind, because you might be very resentful when you get 5 years, 7 years, 10 years down the line and you think, my performance has been awesome. Why have I not got the money that I thought I would have? This is why. Pay attention to fees, because fees matter. Another reason to use Trade Nation. I know I keep banging on about it, but that is why I use them. Okay, with that out the way, it's finally time to get on to the final segment of this training, where I'm going to be talking to you how you can really accelerate your trading returns. I'm going to go over some do's and don'ts. Let's get stuck in. All right, so as I said, the goal of this series was to make you or get you to professional level trading as efficiently as possible. That was the goal I set out in part 1, right at the beginning. And I really, really want to leave this series with my hand on my heart and say that was the best information I could have given. So in order to leave that lasting mark, I need to be able to go away and know that I've given you all of the tips and tricks that I would tell. Literally on my deathbed, I would leave for the rest of the world if I had one piece of paper where I could write, this is what everyone should do, this is it. So I'm going to share with you some do's and don'ts and some considerations so that you can actually get towards professional trading and not lose a load of money and waste a load of time. So consider this. Imagine I gave you some concrete and some bricks and some playing cards, and I told you to build the most strongest structure that you could possibly build with those materials. How would you build it? The chances are you would put the concrete down first as a solid foundation. Then you would put some bricks on top. As you see, many houses are built that way. And then the playing cards would form the roof and the kind of interior furnishings and things like that, right? Because you know that if the roof collapses, it doesn't destroy the rest of the house. And then if the bricks collapse, at least the foundations are still there. You're building a solid structure. And I want you to think of this as kind of a pyramid. Now, when it comes to trading, people don't see this pyramid, but in actual fact, as you move into trading, you're going into the realms of speculation. And with speculation, yes, there's potentially more reward, there's more leverage, it requires more of your skill and time and effort to learn. It's something that only you can control, which is why it's crazy that people just give their money to other traders to trade, because that's not what you should be doing. If you're going to implement a speculation strategy into your wealth creation strategy, overall strategy, you need to be the speculator. You need to take control of it. Therefore, you need to develop the skill. And the truth is, there's tiers of this game that need you and demand you to earn your right to risk every step along the way. Now, what most people do is they build a pyramid like this, and they have all of their net worth, most of their capital in speculation. And guess what happens? It topples over. That is not going to last very long, right? And it topples over because, one, you've got most of your net worth in high speculation. That's very volatile emotionally and, physically. Two, you've never managed large sums of money or pulled large sums of money out of the economy in a business environment for most people. So what makes you think that you're going to remain calm when you pull large sums of money out of the markets in a speculation environment, right? I had a time in April 2020 when I had my largest trading day. It was about $133,000 in a day. And that was even a little bit tough for me without getting a bit cocky or a bit excited, right? And I'd been trading for many, 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 many years up to that point. So if you do that and you pull a large sum of money out of the market, what makes you think you can manage that if you've never had any experience managing money whatsoever, right? The next reason is your IQ, okay? Now, the reason I say IQ is because there was a study done in India, and I've said about this before, about farmers' IQ levels. When the market was low and there was a drought and they didn't have any money, their IQ dropped significantly, okay, by 30%. And when there was a good market and times were good again and the money was flowing, it raised by 30%. And what that means is if you're trying to learn to trade, desperate for money, I have messages every day, people saying, I'm desperate for money, I need to learn to trade. If you're in that position, that very position is what's going to stop you from being able to learn to trade, because you need a high IQ to learn to trade. And I know there's people out there with white teeth and jazz hands telling you that anyone can learn to trade, and they exploit their kids clicking mouses and saying he can do it, and they're saying my gardener can do it in an hour. That's rubbish. Those are criminals, okay? And the truth is, you need a high IQ, at least 115 IQ to trade. So if you haven't got an IQ there, it's either down to your situation you're in poverty and desperation, and you shouldn't even consider trading at that point, or you're just not cut out. You're just not a logical minded person, and that's okay. There's plenty of other ways you can make money if you're not, right? This isn't the be all and end all, right? And these are really, really easy to overcome. So here's what your next step should be right now, and promise me you're going to do these. Promise me in the comments you're going to do these, okay? So before I get into those, here's what not to do. Do not do these. Do not take signal services, okay? Don't take signals. You don't know what the strategy is. You don't have the mental capability to stick with the plan because you don't know the probabilities. You're not in control whatsoever. And if someone ever decides to stop taking, giving you those signals, well, what do you do then, right? No good. It's a complete waste of time. Next, do not give money to wolves. Do not give money to people who keep changing their message, and they look like they're giving you advice, but they're actually just trying to get you into their brokerage, or, you have to open an account or download their platform or their software that's linked to their broker. They're wolves in sheep's clothing, right? That's why I call them wolves. They look like they're doing you a favor, but they're actually not. Trader fund challenges and things like that, right? All those kind of things, a lot of them are wolves in sheep clothing. The odds are stacked highly in their favor, and they've got not your best interest at heart at all. Next one, do not give money to other traders. As I said before, it's your job to speculate. Your skill has to be to speculate. If you're not willing to develop the skill in a speculation, whether that's property or stock trading or Forex trading or business, startup, whatever it might be, that is all speculation, and it's your job to take control of that. You do not put your money with other speculators, okay? And if you do, it should be a very small portion of your money. Next thing, don't learn everything. Don't go to the book after book after book, or go to babypips.com, or go to YouTube video after YouTube video, because you'll lose direction. It will take you forever, and you'll end up in conflict. Okay, you'll just lose trust in the whole process. There's a very good analogy that I use saying the best way to learn how to have a conversation in English is not to read the English dictionary. You can learn every single word in the Oxford Dictionary and still not know how to string a sentence together, because you don't need to know all of that, right, to string a sentence together. And the truth is, in trading, it's the same. You need one direction, one mentor, one you know, to get you from A to B, and then, yes, take pieces from other people, but you need to get profitable first. And if you're going flipping from book to book and video to video, you're going to take forever. I've seen it happen over and over again. Next one, do not approach this as a gambler. Okay, I get asked all the time, is trading risky? The approach is what's risky. It's what makes it risky. The market's just the market. Okay, the market just does what the market does every day. It doesn't care about you. Whether it's risky or not is how you approach it. If you've earned this level of skill, this level of, you know, earned your right to risk. And the truth is this, think about the casino. You go in the casino, there's all these random people playing games, losing money every night. But if you look over at the tournament table, it's the same poker players every night. Okay, and that is one difference between the person who's random and the person on that table. And it's because they treat it and approach it as a business with a logical mind, and they know the numbers, and they know the projections, and they know their risk management, and they know their money management, and they have a trade plan. Okay, they are there every night, not through luck, but through skill. And they are not treating poker as a risky endeavor, because it's not risky. They've got a plan. So don't do that, right? Now, what you can easily overcome all these as well. And here's what you should do to accelerate your journey. First of all, go and get an IQ test. Really, really simple, very quick. It takes under 10 minutes. You know, you can go and do it for free. I've got this one here, Brainity, which is a good one. I think it's free. And it will just give you an IQ test, 3-minute IQ test. Okay, it'll give you a good place to start, and at least you'll know ballpark where you're at. Okay. The next thing is do my wealth test. All of these links are in the description, by the way. My wealth profile test will assess your entire situation, all the pillars of wealth creation, and it's very quick and simple. It's quick yes, no answers. And at the end of it, it will profile you and give you a personalized video and a personalized 55-page report with a blueprint and roadmap on what to do in what order so that you can become financially free as quickly as possible. Now, the power in this is the difference between it taking you 7 years to learn to trade or 1 year to learn to trade, because there might be certain things that hold you back that's taking you longer to learn. Whereas if you just do that one piece, then learning to trade and becoming profitable in trading is much quicker. So make sure you do this, and then you've got a roadmap to follow. Next thing is make sure you know your numbers. You know, test, manage, and learn your incomings, your outgoings, your projections, and keep a level head and never risk more than 10% of your total net worth in speculation. You won't have lasting results doing that. And finally, if you really want to go from 0 to 100% professional trader as quickly as possible, then join my 30-day trader program. I introduced it and touched on it in the last video in part 1, but I get asked all the time about what books people can read and what other informational videos I have. And the truth is, I've got lots of free content on this channel. But if you really, really want to accelerate your journey and want to work with me and the other traders and my team at a very, very small cost relative to your time, then this is the most cheapest and efficient way to do that. I promise you. You get access to me, my team. We cover all of my personal trend strategies, all of my reversal strategies. You get access to my accountability group, and I'm going to share my tools, and then I'm going to show you how I place orders, how to work out your position sizes in your portfolio, how to work out leverage, how to trade trend in multiple ways and reversals in multiple ways. And I also cover in detail the negative carry and the positive carry, as well as all the rollover costs and spread fluctuations, and also capital partitioning, which is a very, very powerful strategy for traders. This is literally all you need. So after the 30-day trader program, you will be flying. It's a no-brainer. And also you get it for life. It's not just the next 30 days. If you're watching this video in the future, click on the link. It will be available for you to join and come and work with me. I'm not going anywhere. And you get it for as long as you like. So it's open now. So hit the link in the description and join me straight away. Let's get you trading professionally once and for all. Click the link in the description and let's work together.
All right, that wraps up Trading for Beginners, part 1 and part 2. On a final note, I just want to say I really, really enjoyed making this video, so I hope that you've enjoyed watching it. All I ask is one small favour, is that you share this video to get it out to as many people as possible so we can achieve that goal that we set at the beginning of reaching as many people with this high quality information so that they actually build wealth and don't lose money and become victims to scams. I believe you can be a great trader, and with the help of this video, I hope this has pushed you along your journey a little bit. Please feel free to ask me any questions in the comments or reach out to me. And remember, all of the tools and the resources and the links for everything I've covered in this video are in the description. Go down there now and make sure you click on every single one. And finally, if you'd like me to do an investing for beginners or stock picking for beginners or business for beginners, let me know in the comments. And if there's enough people that want that, I'll do that next. Take care.